we have some large SPX drawdowns in the past. And what were the typical VIX levels, and what are the levels you want to watch if you are concerned about SPX drawdowns? So today we're going to give you as much context and information as possible to help you with trading.
On the surface, the first thing that we would say, without even seeing your research, the biggest percentage risk to a volatility expansion, hence an SPX drawdown, is when volatility is low. But I think what you're going to focus on is that most of the crashes that's like how the down moves start, but the crashes are kind of the capitulation of the vol expansion. It's the end of the move. It's the true capitulation.
Here are some of the context. You might have read the CNBC news article about how we are in a period of a long period without a drawdown. S&P 500, 377 days without 2% or more drawdowns. What is the context behind this? So what I did is I basically took the data of SPX and VIX closing price from 1990 to 2024. With 8,600 trading days in order to look at three things. One is we will show VIX connection to SPX daily move. And number two is the VIX levels you want to watch if you are for high probability of drawdowns. And number three is a little bit controversial, but I like to experiment with ideas. So I want to the projected time of VIX staying below 15 for the rest of 2024. So how much for the next 6 months? How much of this time will VIX stay below 15? I think there's a good way of experimenting.
That's a little subjective, yes.
Yeah, it is subjective.
Because we've seen situations, I want to say around 2004, around 2007, 2008, maybe in 2017, where we didn't have a 2% move for like what felt like a year and a half, 2 years, like some crazy long periods of time. But 377 days, if you had told me that as of June 21st, 2024, we wouldn't have seen a 2% drawdown for 377 days, I'd have said no chance in hell. I mean, I would have taken the other side of that bet all day long. Actually, I did, and it didn't work. So
yes, I will show the record high. The record number actually is quite staggering.
Yeah. What we have here is the SPX percent change distribution by VIX range. This is a cool chart. So this is the probability of the SPX down 2%, or what does this here mean? So probability of SPX 2% or more drawdowns, and the probability of SPX. Okay, I got it. Go ahead. You can explain.
Yes. So the condition here is when VIX is below 15. Since 1990 to now, when VIX is below 15, your chance of having a 2% or more drawdown is actually just half of 1%. Only half of 1% of the time since 1990 will you have a 2% or more drawdowns in the SPX. The arrow points to the tiny little bit of dark red. That is the percent. That is the probability of a large drawdown in the current VIX level, historically speaking.
When you think about that, it's kind of crazy. The statistical chance of having a 2% drawdown right now is less than 0.5%. It just feels weird, you know? Tony, any comments?
Yeah, I mean, from these numbers, it seems like it's rare. Am I right, Jaju?
Oh, rare when implied volatility is under 15.
Yeah.
Yes, it is.
Which is what we have now.
Yes. It seems like if you notice that as VIX increases, the probability of having a drawdown also increases. So this is a little contradicting to what we might believe, which is the low VIX would have a greater chance of a sudden large drawdown because it's low, right? So the yin and yang kind of like, if it's too low, then you will have to go high. Statistic is showing something different. It's showing that when the VIX is really low, actually the chance of having a large drawdown is very, very small. So that is one of the findings we have. Another is the range. It's in terms of the range that SPX will be trading at when VIX is below 15. It's just below -0.5. It's just -0.5 to 0.5. So 68% of the time, when VIX is below 15, SPX will be trading within this range, based on our data of 8,600 trading days.
That's really good. And you know what? That's been spot on. The hard part as a trader is you're always, it's a little bit of the gambler's fallacy that you always think that that's going to change.
This slide is just a table of the earlier visualization, the earlier stack bar chart. As you can see, there are different probability of risk at different VIX levels. So the highest number of drawdown occurrences actually took place when VIX was between 20 to 30. So you notice the number 79, 74. These two levels had the most of drawdowns out of our study.
It kind of makes sense, but it doesn't. We're not in that area. I mean, the VIX over 40, what has it been there? Only 5 times in 35 years or something like that?
So 204 occurrences. So out 200.
No, 204 days, but those days were clustered. So I think it's only 5. I don't know if it's 5 or 6. It's not a lot.
Yeah. So these are
5 or 6 times in history, you mean?
So, yeah, 5 or 6 times in 35 years, something like that.
So these are the close price. So the close price of if the VIX closes above 40, ever since 1990, this is the number of times in which VIX closed above 40.
It's good.
Now we spend most of the time in that range where you have the most occurrences of the VIX, correct? So you would expect that to have the biggest chance.
Yeah, of
correct?
Course.
Yes.
Of course. I mean, look at the numbers there, 2,800, 2,500, no question about it. What's interesting is that when you look at the total, the ratio, 3.74, and you realize that, where we are right now, we got a little making up to do.
This is just a visualization of all the daily percent change of SPX since 1990. And you may notice that the majority of time, we are between the 2% upward and 2% downward range. Greater than 2%, either in either direction, whether meaning SPX 2% or more or go down 2% or more, relatively rare. And they are relatively concentrated in certain years. So certain bear market years have the most number of these extreme moves. The majority of time, SPX move within this range.
That's just a good visual.
And this is to support one of our earlier statement, which is that the market can go on a long time without 2% drawdowns. So the record is actually a period between 2003 and 2007, over 1,300 days without a 2% or more drawdowns. So this puts today 377 as like a very small number, because historically the market is capable of having a long period of time without drawdowns, a lot of 2% or more. So this actually just gives us enough context to, in terms of how enduring the market can be in low VIX.
Xiaojun, to put that really in context, you have to remember that from 2000 to 2003, we basically crashed.
Yeah.
I mean, the NASDAQ went down 80%. So it's like, that's why I said what we're experiencing now, you're going to see some kind of mean reversion in volatility, but we haven't seen it yet.
That is true, yes.
And what he's saying is you're in the first quarter, not even the first third of this move higher and volatility drawdowns.
The next important question is, when will the low VIX we are in currently end? So just like Tom said that, okay, if you have these periods of complacency, so when is it going to end? When is high VIX going to come back again? And I think this is an important question we should try to answer, even if we get it wrong, which is what I'm trying to do today. So SPX 5,500, is VIX going to be high anytime soon? Let's look at some data. So here's just a simple VIX distribution. And from the look of it, it does seem like we are currently in a risky zone, because the current VIX percentile is 13th percentile in the entire VIX history. So the 87% of the time, VIX is above the current level. So that looks like it's pretty bearish. It's a pretty bearish fact. And how are we going to understand this? So I figured out some ways we can create a context for this, and I think not be as risky as we think to have a VIX at this level. This is a chart. This is a visualization of every year since 1990 in terms of the VIX range. So the more bluish, meaning that these are the low VIX period, the more yellowish, the more those higher VIX areas. And what you notice is that it's not evenly distributed. It's not like every year has to have certain levels of low VIX and the medium VIX and the high VIX. And to the contrary, actually there are years in which the entire year VIX is staying below 15. So it's 0 to 15, and other years it's kind of like a mix of everything. So it's very hard to say that this year, because we have a long period of low VIX, somehow for the next year, for the next part of the year, we have to make it up. So this is just an interesting study showing that showing that VIX doesn't have to be evenly distributed every year. You can have periods of long VIX, of low VIX, and have periods of mixed low VIX and high VIX. Interesting study.
Yeah, that's a really good visual. I don't want you to make me too bearish here, because so far it hasn't worked. Let's go to the next slide, Beth.
So this one is just a little experimental. I'm trying to see if this works, which is that can the first 6 months of VIX performance kind of predict the second half of the year? We go back to 1990. We take a look at all the studies, all the data on VIX, and we find those. We divide those years by halves, and we look at so for the first half of the year, what is the percentage of time VIX stay below 15? And how is this related to the second half of the year? Basically, if the first half of the year VIX stay mostly below 15, does that mean the second half of the year VIX will also stay below 15? And if you take a look at this linear regression, 8 years along in the tail end of this line, in which when you have a close to 70-80% of the first half of the year being low VIX, the second half of the year are usually above 60% or 80%. So basically, if 80% of the first half of the year is in the low VIX range of 0 to 15, then there is a good chance that for the second half, you will have 60% or more of low VIX range as well. So currently, the green dotted line is just where we are. And according to this projection, we should have 77% of low VIX zone for the rest of 2024. And the linear regression correlation is 0.81, which means there is some correlation here.
So what you're saying here basically is the bears are out of luck.
Unless this is a 2007 scenario. If you notice, there's a big outlier here. 2007 first half started with 80% low VIX, and then we all know what happened in the second half of 2007. Nobody expected it, and it said those big bears. So is this going to be a 2007 scenario, or is it going to be one of those 8
Well, it was
years?
actually at the end of 2008, not 2007.
That is true. Okay.
That's interesting. Good.
The takeaways, I think there are, when the VIX
Go back, Beth.
When the VIX increases, the probability of large drawdown increases, which means that if you're concerned about a daily SPX drawdowns, you should be relatively relaxed in the current low VIX level. But as the VIX continue into the 20 range, which is the typical drawdown probability zone, you want to watch out for that. If you want to hedge, if you want to prepare for those moves, then VIX above 20 is the area you want to watch for. And we also know that when VIX is at current range, you should expect a lot of small daily move. That's close to 70% of the time, SPX will move between negative 0.5 and 0.5% in terms of daily moves. So be ready for the small movement every trading days. And if you are concerned about drawdowns, look for VIX above 20. And number two is just, so number one, number two are quite similar. So just in terms of the drawdowns, the majority of drawdowns took place between 20 and 30. So this area is the most watched. And number three, the third takeaway is just my kind of like subjective speculations. Would the second half of the year be in the low VIX zone or in the medium or high VIX zone? I think there's 77% of chance that we would be low VIX zone below 15. So that is just a hypothetical. Of course, people will have to use your own judgment and decide for yourself.
I mean, I don't know how tradable that is. That's more like that's a reasonable mathematical expectation, but it's not, it doesn't take any of the risk off the table. Let's put it that way, especially going into an election.